morning from the Florida CME. This is Chris Robinson with your trader's exclusive comment for today. Well, we came through Tuesday, a great rally from the USDA report. And if you've been following me all year, about 3-4 months ago, I talked about how it looked like people were trying to bottom fish in soybeans. I'll be the first one to tell you that if you had told me on March 2nd, when we were at our lows, that we were going to have a soybean rally of $2.30, I probably would have sold it because I thought you were, over aggressive. So at the end of the day, a great rally led up by fund buying. Yesterday, they bought another 40,000 contracts of soybeans. That's really been the tail of the grain market so far in the first 5 months. Now, we've been focused on what the USDA said yesterday. The biggest thing they did was they dropped projected carryout by about 30%, 28%. That was enough to make people worry about if we have a drought, what's going to happen to the supply situation. So that was the number one thing that sent markets so high yesterday. We had a 70-cent rally, which is really, really impressive in soybeans. We're at 2-year highs, the highest we've been since August 14. If you've been following me, I always like to look for an opportunity to look for a pullback in the major trend. If you look at these types of markets where you have this J market, I guess from your perspective it's this way when it's coming up that way, those can be very impressive. However, the downdrafts can be equally as scary. So if you're long, make sure that you're doing something to protect yourself, because we are going to have a correction. We're not going to go straight up for the next 4 months. When that correction comes, you want to make sure that you're not leaving a lot of profits on the table. So you do that by moving your stop up. Moving over to the flip side in the grains, the not so bullish, you have to look at what's going on with wheat. The numbers we got were very bearish. Worldwide carryout's large. We have good crops production this far for the hard red, which is really suffering today. As I just walked over here, you had Kansas City, which is the hard red wheat, the high protein wheat, at contract lows, making new lows. So it's a seesaw in the grains. We've got a friendly story for the soybeans. The wheat continues to take the brunt of selling. And as far as the corn, we're kind of hanging fire in the middle of our trading range. December corn does not like going above $4, doesn't like going below $3.75. We're going to have to watch the weather to really get a sense for what's going to happen with corn here. The key number we're going to be looking at next is going to be at the end of June when we have the final planting reports. You may get a situation where we have more acres coming on as farmers take a look and say, well, we've got beans at 1080 and corn is sitting at 360, 380. They may be better off economically to plant more soybeans. If that happens, you may see an acre switch. You may see up to 2 million acres more of soybeans planted. And that'll be something to watch if you're going to be trading the grains. Real quickly, just to finish up, talking about the livestock, good moves in both live cattle, feeder cattle, and the live hogs. The live hogs look poised to try and take out their, especially in July and the summer months, look poised to make new highs here possibly. Fat cattle had a gap and go higher on Monday. So what's the one thing all these markets have in common? Money flow. Right now the funds are long quite a bit of soybeans. They are also long fat cattle and long hogs. That's important because in general, you don't want to fade those guys. When they're right, they're going to push it. So that's about it. If you're looking for help with your hedging or your trading, or you don't want to talk markets, look me up online. This is Chris Robinson. Have a good day.